If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. What's going on, everyone? My name's Obi, and welcome back to the Courtside Financial Podcast, the podcast where we talk about business and technology. Today, we've got some fascinating stories throughout the EV landscape and the technology landscape. So it's going to be a super interesting video. We're going to be talking about EVs globally and the overall market. If you're new to the channel, you know what to do. Make sure you hit that subscribe button so you don't miss out on any content. Click the notification bell icon for the same reason. Hit the like button and leave a comment down below. Share the video. Just engage with the video in general. It helps our content to reach a broader audience so we can get our research and information out to more people and be of service to them. So without further ado, let's get into today's episode. Let's kick off with what I consider the most fascinating development of the week: the unexpected convergence of social media dynamics and EV market positioning. NIO's founder and CEO William Li just pulled off what I consider a masterclass in opportunistic marketing. Here's the situation. TikTok, with its massive 170 million American user base, is facing a potential ban in the United States. Now, most automotive executives would see this as irrelevant to their business, but William Li, he saw it as quite the opposite. In the past few days, Red Note, think about it as China's answer to Instagram meets Pinterest, gained about 1 million users. These are what Li affectionately calls TikTok refugees. But here's where it gets interesting, folks. Li didn't just post a simple message. He introduced the users to a concept that perfectly encapsulates the EV revolution happening in China right now. Let me break this down for you because it's brilliant. In Chinese culture, people traditionally say "jai yu" for encouragement, literally meaning add oil. But Li introduced the term "jai dian," meaning add electricity. It's not just a wordplay, it's a metaphor for the transformation happening in the automotive industry today. And get this, he's doing it all while showcasing NIO's battery swapping technology, which, by the way, can get you back on the road in just 3 minutes. Now, why does this matter so much? Well, let me connect it to our second major story of the day. The Biden administration dropped what I call a regulatory bombshell, and it's going to reshape the entire connected market. Let me break this down for you though, because the implications are massive. Starting with model year 2027, and that's closer than you think, there's going to be a ban on Chinese software and Russian software in connected cars. By 2030, this extends to hardware. We're talking about everything: Wi-Fi modules, Bluetooth, cellular connectivity, satellite systems, and autonomous driving protocols. Even if these vehicles are manufactured in the US, if they're from China or from Russia, they're banned. Unless you've been living under a rock for the past 5 years, then you should know that the modern car isn't just a vehicle anymore. It's essentially a computer on wheels. Think about it. Your car has more computing power than the first spacecraft that took humans to the moon. These regulations aren't just about where parts are made. They're about data security, technological independence, and national security. Now, this brings us to an interesting market case study. Porsche. Their experience in 2024 tells us all about the challenges and opportunities in the EV market moving forward as it pertains to a particular segment and class. Their flagship EV, the Porsche Taycan, dropped by 50% in sales last year, delivering only 20,836 units. In China specifically, sales dropped by 28%. Traditional wisdom would suggest that this spells trouble for the EV market, right? But hold on, because this is where it gets interesting. Porsche launched their electric Macan in late September, and in just a few months they delivered a little over 18k units. Let me put that into perspective for you. That's almost as many units as the Taycan sold last year, but obviously in just a fraction of the time. The sales and marketing board's excitement isn't just a corporate spin. These numbers suggest they might have cracked the code for what luxury EV buyers want. But wait, there's more to this story. Let's talk about infrastructure, because this is where things get really interesting. Tesla, despite receiving over $6 $600 million for 49 different projects. We're talking about 11,500 charging ports just got passed over for truck charger funding. And this is where the story takes a political turn. Elon Musk, who contributed over $240 million to campaign funding, isn't just unhappy about this. He's advocating for ending all EV subsidy. Now here's where it gets really fascinating though. California, in what I can only describe as a bold political chess move, has announced that they'll make up for any federal subsidy cancellation, but with one major exception. Tesla will be excluded. Let's break down what this means for the market. The chess game that I always talk about, we're seeing it play out. First dimension, market competition. Companies like NIO are positioning themselves for a post-TikTok social media landscape while building brand awareness for their sub-brand. Second dimension, regulatory compliance. The new connected car regulations are going to face a massive reshuffling of supply chains and technology partnerships. Third dimension, infrastructure politics. The battle over charging network funding could reshape the entire EV ecosystem. Let me get a bit technical for a moment because I think it's important for people to understand the full picture. When we look at NIO's strategy of developing sub-brands at lower price points, clearly it's not just about market expansion. It's about developing a broad ecosystem that can adapt to different regulatory environments. Their battery swapping technology, which they're subtly promoting through social media, isn't just a convenience feature. It's a potential workaround for EV charging limitations. Consider this, while other manufacturers are locked in an aggressive battle for charging funding, NIO's approach essentially creates a distributed network. In markets where they can operate, this will be a game changer. In their social media strategy, it's laying the groundwork for brand recognition, well before they might even enter these markets. Now let's talk about what this means for investors and market watchers. We're seeing a clear divergence in strategy. Traditional luxury brands like Porsche are finding success with familiar models, as evidenced with Porsche's recent success with the Macan. Tesla's fighting a multi-front battle over infrastructure while at the same time simultaneously pushing for an end to all subsidies. Chinese manufacturers like NIO are playing a longer game, building brand awareness and developing technologies that could work around traditional infrastructure limitations. Looking ahead, I think that we're going to continue to see these strategies evolve. The US regulations on connected car technologies is going to force Chinese manufacturers to either develop new supply chains or focus on other markets. This could actually accelerate innovation in other areas like battery swapping technology and, of course, alternative charging solutions. The key takeaway from all this is that EV is no longer just about making electric cars. Success in this space requires navigating a complex web of regulatory requirements, infrastructure politics, and consumer preferences. Companies that can adapt to these multiple challenges while still maintaining technological innovation are the ones who are likely to succeed. What fascinates me most about all of this is how interconnected that everything has become. A social media ban can create opportunities for a Chinese EV company to further its brand. Regulatory changes in one country can drive technological innovation in another country, and infrastructure politics can reshape entire business models. Before we wrap up though, I leave you with this thought. We're not just watching an evolution of the automotive industry. We're watching the creation of an entirely new ecosystem. Whether it's NIO's social media savvy, Porsche's product strategy, or Tesla's infrastructure battles, each player is contributing to shaping what the ecosystem and industry will eventually become. Anyways, that's all for today's episode of Courtside Financial, the Courtside Financial podcast. I hope you found it useful, valuable, insightful, at the very least entertaining. If it was any of those things, make sure you hit the subscribe button, click the notification bell icon so you don't miss out on any content, leave a comment down below, click the like button. All your engagement really does help us to reach a broader audience and continue to produce more content and continue to do research to be of service to more people. So thank you for that, and we'll catch you in the next installment. This is Obi signing off of the Courtside Financial Podcast.